Good morning, good morning. Happy Friday, everyone. Good morning, good morning. Hey, Kev, S. Bill, Ronan. What's up, Terrence? Hey, Kevin, how's Cape Cod? Well, here we are. Cold? Yeah, people in the UK are starting to complain about the cold as well. Ah, it's been a week, hasn't it, eh? Boy. Short squeeze, massive liquidation. Hey, Redcom. Gay Paso One. Hola. Hey, Travis, how you doing? Okay, so I guess we better get to work, huh? I'm dragging it today. I gotta tell you, it's been a long week. It's been a long week. Well, overnight inventory is still short. Now, looks like we're gonna open in inside yesterday's range. So now yesterday there was a big change of business, right? Because we took out these swing lows, you know. And when you take out swing lows, we took out that low, we took out that low, and I think we took out that low too. So when we do that, you get a lot of liquidating inventory, right? You get all these people who are trapped long and they're just puking it out. Now, usually what happens is when you get a big liquidation like this, in the overnight, we get a move up. We didn't this time, right? We're just kind of consolidating around yesterday's low. So for today, I would definitely think yesterday's low and the overnight low are going to get tested. Now, the other thing is these two levels 70, 30, 67, 88, right? And those are the two levels that we're looking at in the zone that we are in. And folks, if you are listening, and if you want to learn how to do this, right, come into our trading room. I promise you it'll be the best 20 bucks you spend. Hell, it's not even 20, it's 19, right? And you get the trading room and you also get our AI, which is the best AI in the trading business because it's actually trained from traders, not from, the vacuum cleaner of Twitter, right? So You found a powerful tool? Or you something powerful? Oh, not a tool. Discipline is about never deviating just this once. Once you break the rules, it becomes a rep that trains future deviations and build bad habits. I agree. I agree, Michael. I agree. I second that motion. Once you break your discipline, oh my God, this business is so unforgiving. This is a very unforgiving business. And what separates us from people who get into trouble is discipline. Right? Discipline is pretty much the hardest thing I've had to do because I was not a disciplined person. Retail trading discipline is big. So what are we looking for on the open? Right? We are looking for a move higher, right? Oh, sorry. See, look at me. I'm all over the place, right? It's Friday. You can tell it's Friday. 70.30 and 67.88. Right? Sorry, I got sidetracked. We did a look above and fail, right? So this is how it works, guys and ladies. And this business is about rotation. What are we rotating? It's rotation of inventory. So you get these two big levels. This is a zone. So we rotated up, we looked above, we came back in, we looked below, we went back up, but we didn't tag 70.30, so we started to liquidate back down. If we continue to get liquidation today, ladies and gentlemen, 67.88 and 3/4 is our target. Okay? If we don't get down to 67.88, we will start doing this over the next couple of days if that area doesn't get transacted. So basically, this is a huge washing machine right now. Big ranges, massive short squeezes, big liquidations. And I told you guys months ago that this market would be run by speculative traders, and it has been. This is the hallmark of speculation. Right? These big ranges, right? Big short squeezes and then big liquidations. Friends, that's speculation. That's not investment money. Investors don't trade in an 80, 100 point range. I mean, now they have algos that help pick apart stuff, but I'm telling you, it's very hard to buy 5,000 contracts unless it's a day like yesterday or this morning where you have a nice tight range so you can get all your supply without paying too much for it, right? Otherwise, when you go in and start trying to transact, the market gets away from you. Now, I know this because I was an executing trader for decades. So, what does that mean for you? What is the common sense application of what I just said? Well, the common sense application of what I said is that you need to really watch your risk, be disciplined, be smart. You know, don't try and take just try this trade. All that stuff with these big ranges, don't do that, right? Only trade when your business setup presents itself. And when it does, then you can execute ruthlessly. But if it doesn't, just wait, right? Don't trade with a gun to your head. It never works out well. Never works out well. So let's go see. Overnight inventory is short, but I am expecting some more selling. I am short biased, and I expect the previous day low and I expect the overnight low to get tested, right? That's a normal business operating procedure, right? After a huge liquidation, it is normal to go test the previous day low, right? Want to go knocking and see what kind of bids are there. Right now, the cost basis of the overnight is right here, 68.47. Hey, Moran. We took some of that, sold it, came right back down, and we're on sale again. So if we open in yesterday's range, expect this kind of order flow, back and forth, right? It's Friday. Monday is a holiday, right? You guys know that, right? Monday is a holiday, long weekend, right? So the deal is don't spend the money that you made this week. Markup Friday? I don't know about that, Jim. We'll see. We still have to clean up a lot of inventory. It could. You might be right. Right? It's like the song, like the song says, you may be right, I may be crazy. Right? Right now, all I could do is say there's sellers here. I'm sure the dealers who are long here, Jam, would love to hear that it's going to get marked up so they could get rid of some of these stale donuts before the weekend. Because you don't want to be carrying that stale donut into Tuesday, right? Let's see. All right, we've been underneath VWAP for quite a bit of time. For a couple of hours, we're doing a little distribution above VWAP. That's how markets work. Accumulation happens underneath VWAP, distribution above it. If we run out of buyers, we're going to break VWAP and we're going to come straight back into this 68.36 level. Expect a little bit of chop. Expect some chop. It's going to be choppy. Right? Trade at your edge. Right? So you need to trade where the trade makes sense. Right? Every trade is a business decision, and every business decision has to make sense. If it doesn't, there's no way you should be in a trade. Okay? So, say we open here. Say we open at 68.51. Right? And you go long. Let's look at this. If you go long here, if you're thinking of a long, your first resistance is going to be 52.25, then up here at 56, then up here at 60. Yeah, you're talking about this? Yeah, we're right back to the scene of the crime, Jam. Right? So if people don't know what he's talking about, he was saying that we're right back in the cost basis before the move up. And we've come right back to that cost basis. Right? Because let me just get rid of these drawings just for a second. What rules do I have set? I have a 5-step process, Michael. If you came into our room, right, you would see that I have a document that outlines all my rules. I have a way of doing business every day. I'm short biased because even though overnight inventory is short, there's a part of me, the old part of me, Mr. Meteor, that believes that sellers are still out there. Now, sometimes that's wrong, right? But I am seeing sellers from the transactions. So what we did was we took this inventory and we went and sold it, and then we came right back to cost basis. So that's kind of on a larger time frame. Now let's get to your question on why am I short biased? Well, because I see sellers here, I see sellers here, I see sellers here, and now I see those sellers have moved down here. So when the offer is moving down, I'm short biased. Now, when the market opens and we get a bunch of order flow coming in, we get a bunch of customers, and we can't tag VWAP and we start taking out these higher levels, then my short bias is wrong. Does that make sense? After a large liquidation, I'm generally short biased because I'm looking for follow-through selling. Now, this market has a nasty habit of running out of supply when everybody gets short. So you got to be careful with your short bias, right? Because if you get biased and you're shorting and you just keep shorting and shorting and shorting and shorting and shorting, right? And the chart's telling you, hey, buddy, quit shorting, you're going to get into trouble. So it's okay to have a bias, right? It's okay to have a bias. But as soon as the chart starts telling you your bias is wrong, right, you have to adapt. See how the offer, they were selling up here, then here, then here, then here, then here, then here. So for you trend line folks, right, you got your trend line. That's what creates a trend line. Bet you didn't know that, right? What creates a trend line is lowering price. When the market's trending down, it means the sellers are lowering price because they have to compete to get rid of their inventory. Where is their inventory? Their inventory is here. So if they run out of buyers, they're going to put it right back on sale here. And this is where I'll be looking for reaction at 35, right, off this 1 minute candle. Now let's go look and see, do we open inside yesterday's range or do we not? We got 9 minutes. Let's see, right? So far, had you shorted 58, that'd have been a nice short. We're getting some bids here. Now, when this thing bids up, just use these white lines. I've marked out where the sellers are going to be. So if the market gets to this level here and lifts above it and prints, it means they've seen buyers and they're raising price. Because remember, folks, it's a market, right? It's commerce. Right? So if you're a seller and you're offered at 48, you get up to 49, and people are ready, willing, and able to pay 50, let them pay 50. If they want to pay 51, hey, sure. Fresh meat, right? So I'll give you guys a little hint. This one's free. You don't have to spend $500 for any fancy order flow software. The top of the candle is where the sellers initiate. If we break 67.88, I don't really know. I have to use, let's go to the candle wax. Right? Let's go check out our daily candle wax. If we break 67.88, the 6,800 area, my swing low will be 67.49. That's the trap door, right? And if that breaks, just here, these are your swing lows. So if these lows break, then all of this candy will start tumbling out. Make sense? I don't expect anything to hold right now, Dale, because this market is it's in the beginning of the year. I want to show you guys something. You guys know a little bit how this business works, right? You don't need to know a lot. But there's 2025. Right? Do you notice that we were up here 2024, right? And then Mr. Trump had his Terminator 2 Judgment Day back in April. And what did we do? We came all the way back down to cost basis, and we reset the cost basis and then right back up again, right? It's a new year. So the people who got paid on this move at the end of 2025, now we've got to bring the market down, right? So people can buy cheap stuff and do this again so they can get paid at the end of December of this year. So this market has to reset its cost basis. You're seeing it happen in Bitcoin. You're seeing it happen in a lot of these speculative markets. Now, silver and gold, the cost basis are way down here, right? The gold cost basis is 33.78 to 36.08. And we're still in distribution because they're relatively new markets on the upside, right? Silver cost basis is down here between 26 and 34, and we're in distribution. But if you look at NASDAQ, if you look at ES, if you look at all these larger, sort of equity-based markets, right? Do not be surprised, like Dale said, or, Dale said 6,600? Could be, right? Because we got to, it's the world's largest used car lot, Dale. We are constantly buying and selling this crap over and over and over, right? So I do the balance zones every morning. Last night, I did the balance zone and I put it in the room at the close, right? On the 1 minute candle chart. The older balance zones, like these zones here, these numbers here, 70.30, 67.88, those levels are from 2020. These are 6-year-old levels. And they pretty much work to the tick. These levels on the 1 minute chart, I redo them every morning. Right? But last night I said, okay, let's go see. There's the liquidation, right? There's that big balance. So I did 68.73 to 68.92. Large balance zones, right? Double it down here to 35, and our 35 worked to the tick, and then we went underneath it. So these I do fresh every day, right? Because I trade off of them, I day trade off of them. This stuff is for longer time frame traders. Yeah, and I'll teach you guys how to do that if you come into the room. There's videos on how to run the balance zones. And balance is cost basis, right? In market profile, they like to use fancy language. So they say value area. Value area equals cost basis. Point of control equals where that cost basis is priced. So the majority of the overnight cost basis is priced at 67.88. I mean 68.47. Okay? So they use things like value area, right? They use value area high, which is a fancy ass way of saying top of cost basis. Value area low is the bottom of the cost basis. Value area is where 70% of the pricing in that day's business occurs. Yeah, we're catching some bids here. And that's all just based on volume. They have a time value area. I mean, time They have a time point of control, which is here, and a volume point of control. I use them together because it takes time to buy size, and it takes time to sell size. But the market profile people don't explain this in a common sense, practical way, right? They tend to use a lot of flowery language and a lot of stats kind of language, right? Distributions and things like that. What I like to do is I like to keep things simple so people know where the hell to take the trade. Where do you recommend where I start with the room? Loki, welcome to the room. There is a thing at the top that says new members start here. Click on that. If you click on the JJ Live, where is it? No, he keeps changing the names of the rooms. If you click on ES Basics Live Training, that's where we talk about ES. And we have like a room for stocks, for crypto, for people who bet on stuff, all of that stuff, right? But if you go to the new members start here, that's the best place. If you get into any trouble or issues or anything, just DM me, right? So who was saying why am I short basis? Mr. Meteor, right? So see my short basis off the open is wrong. You see? Right? So I'm looking for this, but I'm seeing before the market opens, I'm seeing some buyers come in, right? That's okay because I'm not in a trade. The hardest thing I ever found in this business is to have a bias and trade against it, right? Because a lot of people, when they get into a bias, they just get locked into that bias and they won't get out of it, right? I let the chart tell me. And am I wrong a lot? Hell yes. Right? Being wrong is a part of being a trader. If there's a trader who's telling you that he's never wrong, I got some oceanfront property in Saskatchewan to sell you. Right? Traders are wrong all the time. And speaking of traders, here we go. We're open. So there's the seller, buyer at VWAP. Where's the room now? Discord channels have disappeared. Tradingsyndicate.org? Is that what you signed up for, Dale? Do you see how there's a seller meteor? So they sucked those buyers in, banged it down, held the previous day low. I don't understand. What do you mean the room disappeared? Okay, I'm long 49. Guys, I'm just going to get through the opening here. I'm selling the 52. Damn it. Stay with me, okay? Do you still have Discord access? Is it Trading Syndicate? Or was it Microefutures, Slicey Man? Can you guys DM me? Okay, we changed the name to Trading Syndicate, so that might be the thing. Thank you. Yeah, DM me, and Steve's going to post his email address, and he'll help you get sorted out. Sorry, guys. All right, so we're looking for the close. right? So you're right, inventory is short. It's correcting higher. I took a little long, got out of it. Now let's see. We should hold this 68.52 area. There's a seller at 56. See if we can get over 56. If we can't get over 56, look for us to go tag the open again. Okay? There's the open down there at 52. Under 52, we're looking for 50. And boom, there's VWAP. And this is what I'm talking about, my friends. These are those short-term inventory corrections that are very hard to trade. That's why I mark out where the sellers are. I'm long 50. I'm selling 53, 52, wherever they can take them, and I am flat. Yeah, Dale, if you're on YouTube, Steve is going to give you the, what was the business reason to go wrong at 50? Because the offer lifted. But you got to be quick, right? Now I'm going to wait and see if we can take out the previous day low. The business reason is when the offer lifts, right? Sorry, guys, I'm helping people get back into the room, calling out the market and doing trades all at the same time here. There's the previous day low. Looking for 68.38 on the lower stop. And folks, I'll get to your membership stuff as soon as I can. The market calms down a little bit, okay? Hey, LC. Wow. Good to have you back, LC. Little look below and fail of the previous day low. Short covering is buying. Short covering is buying, my friend. And it always happens at the bottom. The very first people to buy a low are shorts. Because they're closing transactions. Oh, I went to buy 44.5 and I missed it. Rats. Now I don't want to buy it. I'm just scalping right now. I'm scalping. See, we're right back to the cost basis before that move up. So if you come into our room, Symphony Trades, you'll see that I have a video, and we talked about this morning exactly, about how to differentiate all that stuff, how to trade it, how to trade a low, how a low is created. Right? We did all of that this morning. And it's on the last video. So I've done about 400 videos on YouTube. Let's see if you're long the previous day low here. Make sure you sell into strength. Oh, point of control's right there. Let's see. We're working out that previous day low. I'll let them do that. It's a little choppy. It's a little fast. How do you join? Here you go. Just click on there, my friend. Just click on there. You're rusty. It's been a while, LC. Man, it's good to have you back. Remember I said it's not weird, even though overnight inventory is short. So we got a couple of good scalps to the upside. But I'm very curious what's lurking down here, right? Are we going to go try that overnight low? We don't have to. Oh, you've been investing like private equity guy in rye, going to the country club and all that? Curious, curious. All right. We held 35. If you're long, I'd be looking for an out at 40. There's going to be some selling at that previous day low. It is choppy and it's a little quick, folks. So don't overtrade. Got to chill out. Let's see where the cookie crumbles next here. Yeah, we got 3 days of supply above us. So now what I want to see is if we could take out that 35. Yeah, no, it's not a dumb question, George. See, the offer is where the sellers set price. So if the sellers are raising price, you go long. If sellers are lowering price, you go short. It's very simple. You watch the offer, right? See, the offer moved from here to there, right? And what did I say? We're going to go test that overnight low. Do not be surprised if we do, my friends. Do not be surprised if we do. Yeah, be careful, it's Friday. Yeah, we don't chase price. Chasing price is just blindly buying. We look at certain areas, like if I was going to go long 35 and then I saw the next candle offered under it, don't buy it. It's not a dumb question because you guys don't really talk about the offer very much, right? Most of you don't even know what it is. So the offer is where the price is set by large size traders. And they do that according to the order flow that's coming in, flow of customers, right? See how we came right to that stop, to the tick, found a little bit of a bid. Now, as soon as a market goes down, finds a buyer, and comes back up, I'm like, where are the sellers going to be? Well, they're right here. See? Now, there should be a little bit of short covering under that overnight low. Let's go give it a love tap and see if we can get down there. Come on now. Oh, they're teasing us. There. See? Now let's see who comes in the store. And folks, this is why I was looking for lower. So that was 68.15, which is a level I've been looking for. And if we break 15, my next level down will be 68.04 3/4. I think you do a lot of AI style context calculation and put it all together and execute with speed. Well, no, George, I mean, I've been trading before I even knew what AI was, right? I've been trading for 35 years, 34 years. So, and I used to trade size for my clients. So once you know the mechanics of how something works, um, you practice. This is no different than learning how to ride a bike or any of that stuff. It's a skill. It's a time-based skill. So if I gave you a motorcycle, George, and I said, okay, have you ever ridden a motorcycle? And you're like, no. Well, then I couldn't really go ask you to jump the fountains at Caesar's Palace like Evel Knievel, right? Back inside yesterday's the overnight range. Let's see if we hold 20. Heck, even when I started retail trading, long 25, flat 30. Ooh, that worked nice. Right? You got to practice, my friends. You got to practice. That's why what we do is I teach you a way so you execute. And we focus on execution. That's why you don't hear me talking about all sorts of crazy indicators and complex stuff. Because when things get complex and markets get like this, people fold like a lawn chair. Right? Your trading plan and your analysis has to be simple so your execution can be fast. The more complicated your trading plan is, when I come and I put the squeeze on you, right? When I start trading really fast around you, you're going to freeze, right? But if you have a simple plan and you know what to do, right? If it's simple and you've executed it over and over and over, and you know the moves, right? What I do is I train you, right? Like a fighter pilot. Damn, I missed that long at 36. That's okay. Right? I train you like a fighter pilot so you react. That's why I trade fast. You got to remember too, right? Yeah, that's the look below and fail. I missed it because I was flapping my gums. So, right? We train you so you know what to do. We get you to do it over and over and over and over and over. Don't worry about shorts on the top of the candle. Worry about sellers. Don't worry about the shorts symphony. Watch the top of the candle is where the size sellers initiate. Nice work, Harris. Well done. Beautiful. Nice. Nice. Now don't go spending all that on some fancy stereo. Okay? Look at this. Some nice short covering coming in. Looking for the 60s. But we know there's sellers here, right? They were there before. They'll be there again. Right? They're like stale fish. That was a nice look below and fail. It was a nice rip. If I was long 36.77 to 48, that would have been nice. Oh well, shoulda, coulda. Okay, there's sellers at 55. Let's see if we can clean them out. Ooh, look at that. Look at that. Now we're correcting overnight inventory a little bit more meaningfully, right? Nice. Ah, boy. Ah, Friday. Friday before a long weekend. Hey, Jam, where are you? We might get your wish. Now, ladies and gentlemen of the jury, if we take the overnight high, be careful because there'll be a lot of shorts using that as a stop. And it'll create a little bit of buying. Your target will be up here at 72. I'll get to your question in a second, Harris. It's a little fast right now, and I'm trying to call out the market. Looking to see if we could get over 60. I'm confused by your question, Harris. Sorry. I don't understand your question. Sorry. I'm trying to watch this price action and I got confused. Apologies. You did great on that look below and fail. Supply runs out, price goes up. Sellers compete, price goes down. Right now we ran out of supply here, 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 and here. That's why we're up here. Thanks, Elsie. Real sellers, right, Moran? Now let's see what's next. What is next? What is next? Chop. I'm going to put my Dom away for a second. So I made a little bit of scratch. I'm not going to lose that now. Let's see. I'll only trade if I see something really, really tasty. All right, I'm looking for a move back down to VWAP. Man, it's good to have you back, LC. There's VWAP. Previous day low at 42. There we go. Selling again. It's a beautiful rotation. Let's see where we go find the bid now. Is this a look below and fail? What do you think, folks? Oh, it's the wrong Dom. Oh, that's the other software. I would wait for the next candle to open. And if that candle opens above 35, 36 and stays above it like now, watch, 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 give it, wait for it, wait for it. Yeah, no long. Yeah, the nice thing about this whole right to the tick business, Rocky, is that everybody hates algos, right? Everyone's like, algo this, algo that, right? But the beautiful thing about electronic trading, algos, and math are that the levels will work pretty much to the penny. And they make me look a lot smarter than I am. And that's not me. That's just because this market is electronically executed. And electronic trading, see, there's the bid. That's what I was looking for. There's that look below and fail of 35 again. So 35 to 40, you're not going to buy 35. So if you got 36 to 42, not a bad trade. But you got to be quick. It's a quick market. The other thing, my friends, is don't wait for an invitation to sell in a market like this because inventory is above us, right? So there's always going to be a little bit of supply. People who didn't sell yesterday, people who got trapped long last night. Right. Now, if you're not a fast trader, that's okay. Nobody jumps out of the womb and is a 3-year-old and trades fast. Okay? Fast trading takes time and practice. and it's a skill that you have to develop. A lot of the trades that I take now, 10 years ago, there's no way in hell I would have been able to take them. Even though I'm fast at making markets and hitting bids, retail trading is completely different, right? So be patient with yourself, right? You know how they say be patient, be patient, be patient? Really what they mean is be patient with yourself, right? Take some time and practice on the sim so you know your software. You know, I was with a client yesterday that I do one-on-one mentoring, and it's a lifetime program, and I was with this client. It was the first time he'd ever put orders in. You know, so I said, okay, buy this level, put your stop here. And he'd be like looking around for the level, and then he'd finally click in. See, with me, if I say, buy 68.51, stop 50, by the time I've taken that breath, those orders are in. So if you want to trade a fast market, you got to be fast, right? Especially, these ES markets have big ranges. It's hard to position trade them unless you got a good bit of dough, right? So scalping is great, but you have to develop your skill as a scalper. So what I recommend doing is going on the sim and putting in your bid and your stop right away. Buy order, stop. As soon as that buy order gets filled, go put your sell order out instantly. Right? Especially in a market that has like a 5.1 minute candle or an 8 or a 10.1 minute candle, right? Sure, the back end and the front end. Okay, the front end of the move is like when we went from 68.09 all the way up to 68.60. Shorting that would have been foolish. The back end of the move is where you short. So, I'll show you. This is the front end of the move. This is the back end. This is the front end of... hang on a sec. This is the front end of the move. This is the back end. So the front end of the move is where price goes up, and the back end is distribution. So you always want to short the back end of the move because you know the seller steps in. How do you identify it in real time? You got to practice, Michael. Once again, you got to practice, my friend. Right? This is the front end of the move right now. So the front end of the move is when the market's going up. The back end of the move is when they start to sell. Now you got to sit and look at charts, my friend, for a while. It's not going to come in 5 minutes, right? It's not going to come in 5 minutes. So how do you identify it in real time is you have a framework under which, so when you come into our room, when you come into my coaching program and my mentoring program, right, I teach you how to see a market. Then I teach you how to execute on what you see, right? So most of you guys don't even know what you're looking at, unfortunately, because they don't teach this crap in school, right? They don't teach market structure, auction market theory, order flow, inventory and cost basis. They don't teach that in school. So these concepts are completely foreign to you. So when you come into my room, I will teach you how to see a market. Once you learn how to see a market, you'll learn how to execute it. Let me make a parallel. You know how a doctor, like say you're in first year medical school, right? Or even if you haven't even gone to medical school in your first year basic sciences, you're not going to be able to do heart surgery, are you? Right? You got to first know where the hell the heart is before you start cutting away, right, Michael? So it's practice. That's all it is. There's nothing magical about this, right? Yeah, when the market is crashing down, the move is front end. Exactly. You have to practice. What does it mean if people are trapped long? Hey, Loki, welcome. So say you buy a stock at $5, and it's now trading at 3. You're trapped long. Make sense? You bought something. It's you bought something at $5 and it's at 3. You're trapped, and you will liquidate. You might have already gotten out. Yeah, I say it all the time. It's simple, right? So anybody who bought ES above 68.44 is trapped long. Get it? So we sell something to you at 5. The market goes to 3. You puke it back out. We buy it back at 3 and take it back up to 5. It's rotational, Mike. How you doing? No, Loki. Are you looking at my screen? Look, brother. Look at this chart. Okay. All right. Stay with me. Okay. You see all this time and volume traded up here? Well, if you're long between here and it breaks, you're trapped. It's so simple. You'll freak out when you realize how simple it is. Don't worry, you're brand new. There's about 300 videos in the room, right? Just remember, you bought something at 5, it's now at 3. You're trapped. You don't need to look at the contracts. You'll get it. Don't worry, brother. You'll get it. Whoa, see? Another look below and fail. Let's see what happens. Let this candle play itself out. It's choppy and it's a little quick today, right? Right. Yesterday I asked the question, does your level of skill match the price action? It's an important question. And it's okay if your level of skill does not match the price action. Work at it, right? You got to put in the reps, my friends. You got to put in the reps. I use the mouse for execution. But George, you got to remember, I've been trading since 1993, right? And we used to run 200 to 300 trades a day. So if I've been doing 200 to 300 trades a day for my clients from, like, let's say 1995 to 2012 when I had my heart attack, do the math. I've done a lot of trading. I have to be fast, right? Because if you're not fast, you're fired. Like, George, if you gave me an order to get rid of 500,000 shares of a stock, and you know that there's a 200,000 share buy order coming in, and I don't fill that buy order and somebody else does, you're out a lot of money, and I get fired. Right? Traders are replaceable. We are so easily replaceable. If you don't answer the phone on the first call, you're fired. If you miss a trade, you're fired. Your job is always to get the best price you can, no matter what, no matter who you have to go through. Right? There's 300 people waiting to take your client because your client makes you a couple of $100,000 a month. And if you have 10 clients that make you a couple of $100,000 a month, that's some serious money. Right? So you can't afford to be slow. You know, my very first Swiss banker client, he would call me at 3 o'clock in the morning. And if I didn't answer my phone on the first ring and I'd be sleeping, who cares? He doesn't care if you're sleeping. He doesn't care if your dog died. He doesn't care if you... They don't care Where's my fill? Right? All they care about is where's my fill? Did you get the order done? If you don't, there's 300 guys willing to replace you. So there's a sense of urgency, right? We were trained by people in the 80s who said you got to get up every morning willing to bite the ass off a bear, and we eat stress for breakfast, right? Mindfulness was a pack of Marlboros and a Jack Daniels, right? So everything was fast, and we were trading off of phones. So clicking a mouse is a luxury for me, right? And a slow trader is about as useful as a poopy flavored lollipop in my business. So you got to be fast. You train yourself to be fast. Just like a fighter trains to throw fast punches. All it is, it's just a physical skill. And you need to practice. Now, are we going to get any resolution to this chop? Or are we just going to keep going back and forth between 68.30 and 52? Let's see. Still early in the morning. Nope. Hang on a sec. Somebody's at the door. Come. One sec, folks. Be right there. I shall be right here. One sec. Alrighty. Good to have you back, Elsie. Something is building? Or did you like have a bad meatball sub or something, Mike? Maybe take a Tums. Hey, it was there. I had to take the shot. Oh, in the market. Okay. Uh, Alrighty. Okay. What's next, folks? What's next? Okay, we're getting bids at 35. There's sellers up there at 47. Oh, now they're at 43. It could be getting a little slow. You know, when you turn a market on, you get that big burst of order flow and then things slow down. Just like, when you open up the store and you get that big flow of customers and then it kind of slows down a little bit. That's what's happening now. Right? Yeah, we're still vacuuming the room. We're vacuuming up all those contracts because we had 3 or 4 days above 69.43. So those people are slowly easing out of this thing. Now, if you're really on the ball and you're well caffeinated, I am not. You could just probably trade that back and forth. Right? The nice thing about balance is you can just go and trade this back and forth. When it gets back underneath, you short it down. When it looks below and fails, you take it long back up. That kind of works nicely when we're in balance. Ed, how you doing? What part of the country are you in now, brother? Now, a lot of people get really annoyed when it's choppy like this, right? If you do, just take a break from the screen. But if you're interested in learning, draw those lines and then watch the offer. It's a great learning time. See how we came right to that white line and stopped? Watch the red line, the offer. When it gets to that white line, if it lifts above it, it means they got fresh meat, new buyers, and they're going to raise price. But if the buyers run out, they'll come back underneath that 52 line. See? Look, fresh meat. Next level, 56. We stopped right there. Markets come back down. Right? You can use this and you can learn. And it is the cheapest, best indicator out there. It's better than anything you can pay money for. Oops, sorry. So if we get above 68.68, I'll be looking for 68.87, just looking at a clean chart. Here, I'm going to show you something, a little longer time frame here, folks. You guys see this? This is our position. Our position is here, off of that liquidation. The position is here. The next position will be here. So if you are going long, you're going to be looking for resistance at 68.80. Right? Because this shows you, check this out. When a market starts to liquidate, see how it liquidates and then it starts building a cost basis there at 68.80 and then drops down. Now watch that volume start to build at the lower level. Look, see? Now if we take that, we're going to go tickle that W stop and we're going to come up to this area here. It's very simple. It's not easy, but after a while you start training yourself to see things in the way of the business instead of the way of retail. Right? If you start to look at things in the way of how the business works, it'll totally change your life. Nice work, Fish. Nice, nice, nice. Maybe, I don't know what software you're using, AZS. Could be the data's a little slow today. Oh, that's another thing. If you find that your software is not fast, if your data is not keeping up, stop trading until you figure it out. I'm paranoid about that stuff. Now you got to remember, I grew up with dial-up internet. So as soon as my software starts doing something weird, I'm flat and I'm out until I figure out what the hell's going on. Don't ever push a bad software issue, right? There's nothing worse than being stuck in a trade and not being able to get out of it. Oh, it's like getting a root canal without any freezing. I love CQG. That's what you're looking at right now. But you got to understand, Michael, when it really starts kicking off, when it starts getting really, really fast, no retail trading software is going to be able to keep up with the market. Do you know why? Because we only pay like 50, $100 a month, right? The thing is, retail trading systems are not built for volatility and that speed, right? They're not bad. They're not bad, right? They're not bad. But you've got to understand that institutional traders and prop traders and size traders, they spend millions of dollars on technology, and their data feeds are like 100 grand a month, where we're paying $50. So of course, their infrastructure is going to be much better. That's always good to remember when the markets are very, very fast, right? You might not get the best fills, right? Right. And if your data or if your software is slow, if your computer's acting like it's got a cold or something's off, just don't trade. It's just not worth blowing up stuff. Big rotations again. Sellers at 64, coming back down. Let's see if we can get back to VWAP. How's everybody doing? You guys still awake? I don't even have my crypto open. Well, how's the coin of bitterness doing? Let's go take a quick look. Oh, it's up $2,200. Lovely. Ethereum 2025. It's not that bad. So once again, folks, if you're tired of losing money, if you're tired of not understanding how this all works, and you want to make some money, you want to learn how to do this, make a living, come check out our trading room. I promise you, a month you will learn more with us than in 10 years anywhere else. And it'll be information that you can use. Thanks, Truth. No, I never worked in Chicago. I'm an executing trader for people who take companies public. So say River Rock, if you and 3 or 4 of your friends took a company public and did an IPO, I would manage that process and I would manage that stock. So my job is to sell 100, 200 million shares of stock over a 2-year period. That's what I do for a living. I'm an executing trader and I liquidate for insiders. I never worked on the CME on the floor. So I traded for pools of capital, like people who, if you finance a company and take it public, I'm the guy who sells the stock for you. Yeah, that's what I did for decades. So, my clients over the years, a couple of hundred IPOs, I did 200 IPOs, reverse mergers, shell deals, everything from gray market to pink sheets, over-the-counter bulletin board, NASDAQ small cap, New York Stock Exchange, American Stock Exchange, Berlin, Frankfurt, AIM. You take it public, I'll sell your stock. I'm what they call an executing trader. The guy you never hear about. The guy who's selling when all you guys are buying. You know how you guys get that ad, oh, buy this stock, it's really great, it's going to go to the moon, yada, yada, yada. You guys go to buy, I'm the one who sells. Right? So I'm the reason why stocks go down. Not because we're shorting, it's because we're selling large chunks. How am I well versed in market profile? Well, in 2012, I had a heart attack and I had a quintuple bypass. So I had to do something a little less stressful. So I thought, oh, retail trading will be easy. Doi. Wrong. Not. So I started, trying to learn how to retail trade and I stumbled across the market profile guys at Tasty Trade, Peter and Brad, and they turned me on to Jim Dalton. And thank goodness I found Jim. Love Jim. He's the best. And so I started with market profile with Jim. But I found that it wasn't very practical. So what I do is I take market profile and I make it practical for normal people. There's like maybe 3 or 4 concepts of market profile that you really need to know. The rest of it you can bin because you're not going to make any money off of it, right? So what I do is I make sure that you guys have only the information you need, so you don't have all this crap bouncing around in your head. Okay? That's my thing. I'm like, what do you need to know to make money? Everything else, throw away. Right? So everything we do is practical. Right? Everything we do is practical. Why do you take this trade? Why will it work? Why will it not work? That kind of thing. It's got to be practical. Yeah, so that's how I got into it. Right? Because a lot of these trading rooms and a lot of this education is like, well, you know, it's random. And it's like, no, it's not random. It's a business. So I try and teach you guys a little bit about the business, but I don't overload you with that stuff. So you need to know what you need to know to make money. Everything else, we take it and throw it away. Right? Because if it doesn't serve you, it shouldn't be rattling around in your head. Right? And occupying space in your head when you need that space to focus on execution. We're very execution based at Trading Syndicate. What do I need to do to make money? And also, what do I need to know when to trade, when not to trade, so I don't lose money? Right? Because trading is great, But a lot of people lose money because they're trading at the wrong time, they're in the market at the wrong time, and they don't know what they're doing, right? Ah, I do. I mean, I like to read, you know? They're a good read, but sometimes they can be kind of confusing. See, the whole thing with me, Attila, is where do you take the trade? What is the business reason for taking the trade? Let's just go look at this real quick while we have time, right? So say you're going long here, for example, right? You're going long here, you're buying inventory to sell up here. If somebody puts that inventory on sale underneath, there's no reason for you to be in the trade. So you go long, stop, and then sell into strength. So there's a business reason for a trade. So when a market comes back, goes under a level and comes back up, the sell orders are complete. So you go long, you put your stop here, and then you sell into strength. Like right here. Look below and fail, long, stop, sell. Right? You don't need a book to do that. There's nothing wrong with reading. Right? So all I care about is that you guys actually make some money. Right? That you guys execute. Right? Most of these books are great, but they don't help you with execution, right? And what we do is execute, 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 execute. Train yourself to execute. Train yourself to make good business decisions. Train yourself to not take stupid trades. Train yourself to have good business discipline, right? All the boring stuff, right? Responsible, discipline, all the stuff that I hated when I was a kid is what is how I make money now. But all the stuff I hated. I hate discipline. I hate being responsible. But you got to do it in this business. Retail is about being responsible, right? It's about being smart, making good business decisions, and not doing crazy stuff. You got to unlearn a lot. I had to unlearn a lot. I had a lot of bad habits, right? It's easy to get bad habits. You get lazy, right? But you can't when you're a retail trader. The reason is there's no margin for error as a retail trader. And you also know what else? Why retail trading is the hardest job in finance? I'll tell you. Get ready for it. You can't cheat. You cannot cheat, which really sucks because cheating's easy, right? Stuffing bad trades in other people's accounts. You can't do that when you're a retail trader. It doesn't work, right? You have to, you know, it's horrible, right? There's no way to weasel away around these things, right? You have to be responsible. So that was hard for me, right? You take a bad trade on a trade desk, you could stuff that trade in somebody's inventory. They wouldn't find it for a week or two. Oh, sorry. I miss the old days. Right? If we lost 5, 10 grand on a trade, a market maker would take the trade and put it up for us. Hey, can you put up 10? Yeah, sure. Right? They don't care. They're making 200 grand off you in a month. What's 10 grand? Right? Sometimes they make 100 grand off you a day. They'll put up 10 grand for you. So you screw up on a trade, they'll take it off your heads. There's nobody to take it off your heads when you're retail trading, right? So there's absolutely no way to cheat, right? Options leaning more long than short, like the Leaning Tower of Pisa? Okay. We'll hold you to that truth. Whoop. You're right. Look at that. They just took the stop. Remember, folks, have a wonderful long weekend. Come visit us at tradingsyndicate.org. We will teach you how to make money in this crazy business. We'll teach you how not to lose money first. We'll teach you how to see the market. We'll teach you how to execute the market. And you might actually have a good time in the process. Okay? Enjoy President's Day. It's President's Day, right? Washington's birthday. Something like that. Have a wonderful long weekend. Thank you all for being with us. Appreciate you guys. We'll see you on Tuesday morning. Now stay out of trouble out there. Don't take candy from strange market makers, okay? Thank you, everyone. Appreciate you guys. See you on Tuesday. Bye for now.